Friends, good morning. I hope everyone is well. We are in Wednesday. Tuesday here, the market did well. I am completely shocked of how well the market did. I did not think we were going to see market push until Wednesday, Thursday, Friday. But obviously, the market is looking for any excuse. I said this a month ago. I stand by it, and this is not like me trying to act like a guru or something. It's just so obvious. The painting is on the wall. The elephant, we can see it, the room here. The market is looking for any excuse to run right now. And as we get closer to next week, obviously with this rate cut potentially heavily coming here, it's showing clear signs of, the market's going to do what it wants to do here, and it's going to drag everything with it, which is great. I think a lot of what we're seeing here, people are like, why did the market blow up so much today? One reason, too, is because Monday throughout the day, I think there was a lot of holdback. We saw a lot of people like holding, like, there really wasn't a bad day Monday. It was just like nothing was really happening if you really paid attention to the numbers. It wasn't like, oh my God, the streets are red here. It was just, oh well, things are red, but it's not terrible. Throughout the day, we had all of our big analysts, start talking. From Dan Ives, Tom Lee, down, everything, and everyone was very bullish on the market. Very bullish. TikTok, YouTubers, everybody was making videos, and everyone's pretty much on the same page. I think generally the bubble of investors that are in the market day to day, whether you're swing trader, option trader, day trader, long-term trader, we're kind of all in agreement right now where the market's at and what's going to happen here. And this is why, I don't know what the theme of the market is next year. I don't know. I really don't, because I think there is a theme in every market every year. Last year, chips were a huge thing. This year, chips obviously, but this year we saw software, security stocks. Palantir being a huge, of that conversation. It's kind of died off a little bit here the last few months, but still, obviously Palantir has been getting a lot of criticism, but couldn't be more bullish with what's going on over there. But SoFi here, bank stocks, this is where it's very interesting, because it's like, could we have a year here in 2026 where bank stocks are hot commodities? And this is where the conversation starts with next week, where we have this third rate cut. We go into January. We're that much closer to Q4 is coming out. The MAG is going to release another solid set of quarterlies here, no doubt about it, with holiday pay going into that. But Jerome going out, we're going to get more rate cuts. Whether you're against if you're against rate cuts, I hate to break this to you, but there are rate cuts coming next year, because Jerome is going to be gone. Trump's going to put someone in place, going to put rate cuts. Boom, here we go. This is why bank stocks are getting more desirable, and you're seeing, even like people that I look to as, my gurus, that I'm like, what are they doing? What are you focusing on? And like, I'm talking to friends and stuff like, what are you thinking we're going into here with next year? And, it's a lot of what the conversation is out there with, even Tom Lee. I think, I've heard everyone talk about Tom Lee. It's amazing how much we're all kind of like, what is Tom Lee saying? But he's when someone's calling the market this well, it's hard not to pay attention to what they're saying, and to him running what he runs and being in Wall Street. He's got some information that we don't have here as just, day-to-day investors, daily investors. But the theme right now is that, bank stocks, ETFs, REIT stocks, housing stocks will do well next year with more rate cuts. And now Trump is, and I don't even know what this looks like in the market, but this could be another play in the market where, I think there's two things that are significant to the market next year that we haven't had here. One is that Jerome Powell, when he leaves as chairman, I think that will be a pop in the market. And I say that not to, honest to God, I'm not trying to get politicky by any means, but I do think that you will see a push in the market when it's official, Jerome's out, and whoever Trump puts in there, because it's going to be like a clear green light to say like, hey, we're definitely something's going to happen here. we've had Jerome here the past how many years it's been now since Trump first came in the office the first time. And he's been a bit of an Eeyore. Now, obviously, he's done what he's done. Like him, don't like him, whatever. But two, I think that could be a potential pop in the market right there. As crazy as that may sound, nothing drastic, but just like whoa, there's a push here. There's this is happening. Two, with that, now Trump is talking heavily. He just gave a fresh interview. It was Tuesday here, talking about these tariff stimulus checks, where he is dead serious about these. And two, now he's talking about taking in so much money from the tariffs, yada yada, that now we're talking about taking away income tax or lowering it, whatever that looks like. Very broad skeleton details of that right now. But these stimulus checks, what does that look like for the overall market? That's money in people's pocket. The market may like that a lot. So it's interesting what we're kind of seeing going into next year. I do think that SoFi, and I say all this because it's so related to SoFi. Because SoFi, yes, bank stock, obviously. But SoFi is so youthful still compared to where we could be this time next year. This is so important. This is so not a joke right now, where you can look at SoFi and go, this could get radically crazy. This could get radically crazy right now, where SoFi comes out with this Q4, boom, it's got the B in front of it, plus, billion plus. Okay, we're off to the races. Is SoFi going to be taken into the S&P 500 this year? This is a big question. We don't know yet. If it is, man, oh man, wow, that is a pop right there in itself. There's been a lot of articles released this week, and not that articles know it all or they're super important, but they do put out a theme. They do put out an aroma out there for general investors that are, looking for information. I read 2 to 3 articles, maybe more than that, today with SoFi, where analysts are projecting SoFi going into the beginning of the year, Q4 to Q1, pushing it over from $35 to in the $40 range. I think that's very acceptable. I don't think that's crazy at all. I personally am thinking that SoFi, once we get through Q4, looking at what Q1 can be, we could, in two, with Jerome, and where everything is kind of lining up here with quarterlies with SoFi, and Jerome Powell walking out, new person walking in, going into Q2, hey, potentially rate cuts on top of that. We could have these moments of leapfrog moments in price action with SoFi, okay? This is why it's so desirable right now with a lot of investors, what they're seeing here. And two, S&P inclusion, where does that fall? If that happens, where does that land? There's a lot of special moments that SoFi will find here in 2026. So these are things that, they're just going to be these moments of a shift up, a staircase up, 30, 32, 35, 38. Then we start getting into a new path of 40, 50s. I don't think it's that crazy there's a lot of different projections out there with SoFi right now, but I don't think it's that crazy to say by this time next year, if a lot of these elements take place with SoFi, we could be looking at anywhere from $60 to, $100. Now, obviously, a lot of this depends on the progression of the market. Now, if you look at this and you go like, well, that's impossible. Stocks can't run that. They can't do that much. Where have you been all year? Where have you been all year? Have you not seen what Robinhood did this year? If you know me, I have a huge debate right now where I'm very bullish on Robinhood. I think it's a phenomenal company, stock, everything. I'm not here to talk bad about it. But I do think there is an argument to where SoFi could start to be a huge problem for Robinhood when it comes to attention, where SoFi could start to catch up tremendously here by Q1, Q2 if Robinhood starts to slack off, like they have in the past here this year, where quarterlies have been good, but they've been a little mixy. Robinhood cannot continue to do that if it's going to stay above SoFi. You're not going to have people buying Robinhood here at $130 a share when SoFi is on their tail, revenue-wise, and bigger company-wise with what they're doing fundamentally in the banking sector, when you can get SoFi for inclusion potentially in the SP 500, a $30, $40, $50 stock even if SoFi is running at $60 by July of 2026, we're pushing the thought here, but we've had a big year. We got to dream big what's going in 2026 here. Think about this. This is common investor sense stuff right here. This is just, you're going to buy the hot dog over here that's $2 or the same hot dog over here that's $1. Where's your mind go here? Obviously one tastes better. And to me, I am biased on SoFi. I will be honest. I think SoFi is going to do better in the long run because of where it is structured to go. But I do think Robinhood here is going to be its own entity and do very well with what it's doing here. I say all this to say, friends, that SoFi is back up, obviously, in this $30 range. We've been here. We've paid a little more for SoFi, 32, 33. Yeah, we've touched that place. I do think there's a real chance here that we're going to see the market do phenomenal here. I think these are just the telltale signs of what's coming here. Rate cuts are coming, it looks like, and SoFi could obviously run with the overall market. Like I've said, I've used this example of dragging, that a lot of stocks here from big to small, everything will be dragged with the market pushing up, and it will do well. There's going to be stocks that have no business running, but they run because the whole market will probably be, back to where we were, in some last big runs in, August, September, even beginning of October, when we had those last big runs moments in the market here this year. So be excited. This was a great year for SoFi, but this year it is obvious that SoFi is locked and loaded going into this year. There's no more excuses at this point. SoFi, as long as they continue to do well in these quarterlies, and this is the thing too, even once SoFi gets into this $1 billion range of quarterlies, as long as it stays minimum in that $1 billion range with quarterlies, that's enough excuse for it to become a bigger, stock, a company, everything. They're making a lot of money at that point, okay? They're keeping a lot of money, at that point. So this is going to do well for our investors, 100%. So yeah, this is a day-by-day situation watching. I'm very curious to see what can be pushed out of SoFi in December here. I don't think it's crazy to say like, hey, we're going to get 32, 33 back here. I'm looking for end of December. How aggressive will the market run here? What is the SP 500 actually going to run to here? Are we looking at 72, 73, 74? Somebody said 74 today. I think 71, 72, I'm perfectly at that point. That's great. But with that, the market's going to drag a lot of everything with it here. So SoFi here, at the end of December, are we looking at probably more than likely new highs in the 35, maybe 40? Who knows? It's going to be interesting to see. So we'll see, friends. I'm excited, man. I am excited. This is really good. This is going to be a huge place to be, man. Friends, take care of yourself, and I will talk to you soon. Have a great day trading. Bye, everyone.